what happens, people are very clear about true and fair. Now, why does not the external, what is the reason? What is the reason why they don't give absolute assurance? Is that why they give? They see that because the inherent limitation of what is the key thing to remember is that external audit can never give absolute assurance. We cannot say that everything is 100% perfect. Because we are, see what external auditor will do. External auditor will do on sample. External auditor, what are the responsible? Year-end balances. Is a year-end balances. They will do it only on sample. They cannot, nobody will do. Even internal auditor will cannot, if you say internal, they cannot. Only thing is, there should be, in some way we will cover. There is something called as interim audit and there is something called as a final audit. Interim audit, see the thing, in your organization, interim audit done on monthly basis. Is that interim audit will be done on monthly basis? Is that it is continuous? Whereas final audit exclusively with respect to year-end balances and exclusively with respect to samples. Is there? There are some limitations. Now we can another thing. We cannot say that. I cannot say. Can we say that we can give anybody guarantee 100% guarantee? This is what it says. There is a difference between a guarantee and warranty. We cannot say it is a guaranteed financial statement. It's a huge organization, different locations. We don't know what are the systems they are following, controls. So that is the reason. That is one of the reason they will never give absolute assurance. Is it okay with you?
Yeah.
Next. What are the inherent limitations? Now you see the thing. Whatever, put the things. 1, 2, 3, 4, 5, 6. Limitations with accounting. Definitely. There will be errors. Is it that when you are talking about the errors, is that there are 3 types of errors are there in accounting. What are there is an error of principle. Is that there is an error of principle, there is an error of commission is there. Is that there is an error of omission is there. See why we are doing audit, we want to know very clearly, we have the responsibility to know what is the fraud and errors. Okay, then there is an error of principle, error of omission. There will be limitations in accounting and control system. We cannot say that internal controls. Okay, we cannot say that internal controls are perfect. Nobody in the world say that we are having perfect controls. They will always, is right? They will always some flaws will be there. Is it right? There is always some flaws will be there. There will be always some drawbacks will be there. There will always be a improvement. That is the reason. Always is a continuous process. And limitations of accounting all in terms of errors. Now, we cannot test, not all transactions are tested. We are testing. Can we do it? You have huge number of transactions. Even if you appoint a staff, we cannot do that. There will be errors. There will be some errors. If you have done your financial statements, you will come across something called as a suspense account. What we are doing in the financial auditing, we will first submit an unaudited report, then we will submit an audited report. We cannot say that we will have a final report. There is a draft, is it right? There is a draft. There is a scope of errors will be there. Not we cannot. Auditing requires judgments. See, this is what it says. We are what accounting is based on what? Accounting is based on assumptions. Is it right? Accounting is based on assumptions. We are talking in terms of assumptions and we are talking in terms of limitations. Yeah, you are using, see the what happens, you are using different methods of depreciation. You use your return down method. It is a judgment what you are making. Is a return down value method, your judgment. I will think that no, it is not a return down value, it is going to be on the straight line method. That is the reason when you are making a things, till now we have a doubt, okay, that, but subsequently what happens, the concept of depreciation have made it very clear. When you are talking about land, they say it is no depreciation. When you are talking in terms of buildings, is it right? They say that the buildings will always be on a straight line method. They are talking in terms of plant and machinery. When they say plant and machinery, they will say that it is based on return down value method. The message is very clear. The message is very clear. We want to know, we want to minimize the scope of judgments. Is it? We should know. That is the reason we say it is IAS, IFRS. Why IAS came into picture? They want to be regulations. That's very simple. That you have to follow these things. You should not have your own assumptions. You can have assumptions, but to the limited extent. Auditors' report have limitations. Is it right? We can say that as simple as that. Limitations in terms of what? In terms of time constraint. Limitations in terms of resources. Is it right? You don't have experts. Limitations in terms of experts. See, they are not going to give any excuse to that. But we should not say that. What we have done, the rule says that auditors keep it in mind. It will be in the question. It will be the question. Auditors, I am writing very clear. Auditors can only request. Okay? Auditor cannot, they can, I am writing in red, they cannot insist. You cannot say that I need this. Is it right? Auditors can only request that we want this. That is the limitation. Auditors say that yes, we are giving only review engagements. Limitation. Auditors cannot say that we get involved in the management. No. Auditors will have to give only opinion. Auditors can only review. Is it right? Auditors only review. Auditors can give only an opinion. Auditors can give only an assurance. Even the auditors cannot give advice. They cannot be part of the management. Okay? They cannot say that yes, they cannot be part of the decision making process. That is the limitation. Is it right? Auditors are only restricted to financial statements. Is it only to restrict to financial statement? They are not talking about in terms of management accounting, cost accounting. No. That is the limitations of auditors. Next, point number 5. Audit evidence indicate what is probable, maybe. This is not certain, is it? The audit evidence is probable. What we are saying? We are saying where this is the most key important word. They say that they will get only sufficient and appropriate. You cannot demand that I want certain information. You say what you are going to audit the thing. You will say ask what is the information related to payroll. You will ask what is the information. We will stick only to one. Okay, we will stick only to one. We will say that what is the information with respect to cash and bank. They will provide all the information. Is it? You need, as per the requirement, you need how much? You need 10 different evidences. Okay, but they will provide how much? 1, 2, 3, 4, 5, 6. You will ask some more evidences. Okay, fine. They will say that we have another evidence of we can provide 7. We don't have another 3, balance 3. You cannot say that you cannot insist that I want other three also. Based on this evidence, is it right? Based on this available evidence. Is that based on this available evidence? I'm talking about the audit evidence of chapter 5 also. Okay, chapter 5 also. Automatically your understanding at that level will be more easy. Based on the other available evidence, you will give your opinion. Is it right? You will give your opinion. Fine. That is what it says. The auditor's report is issued while after the, once it is done. Is that once after the reporting? What is the reporting date? What is the reporting date with respect to financial statements?
It depends. Sometimes it's end of the year, and sometimes it's just for like schools.
Reporting date is the date of preparation. The date of preparation is called as a reporting date. You are preparing on 31st December. That is the reporting date. You are preparing on or I am writing very or. You are preparing on 30th June. Okay. You are preparing your financial on 30th June. 30th June is the reporting date. Very clearly, the message is very clear. You will have so many things. We are preparing after reporting date. See, now you see audit is going on in most of the audit firms. They are doing it what? After 31st December, they will prepare the. Now, before what happened, you cannot go back because accounting is basically, when you are talking about the accounting is basically done on what? Historical basis. That is one of the limitations of accounting. That is one of the limitations of, we are playing on historical basis. Now you are doing, now what happens? Reporting date is 31st December. Is that you can prepare your audit till 30th of April. You take Oman into consideration. 30th of April is the date on which you have to submit the audited reports. Now you are doing the process at this stage. Is that you are in this process at this stage? Is that obvious? We are preparing the audit report after the reporting date. This date is called as a reporting date. These are the limitations of the auditor. These are the limitations of the auditor. They will say that how it has going to means you have the limitation with controls and accounting systems. We are not going to test all transactions. The audit requires, it is based on the judgments. We have, auditor have the limitations with respect to resources, experts and all those things. They is only probable, not certain, and most importantly, they issue after the reporting date.
So what do we call the period between December and April? What did you say?
This is where they are, this is the data, this is where auditor will review. Is it? Auditor will review the financial statements after reporting date.
Okay.
Okay, auditors will. Now you see the thing. If you have your friends who are working in the audit firm, even some cases, they are working on Fridays. They have to complete it. Okay, that is the place where you are going to review it. Is it okay?
Yeah.
Next. What it says, see the thing, very interesting. What are the benefits? These are the things. It improves. Any doubt is there, just ask me. Any technicality is there, I will make it a point. It improves the quality of the information, definitely because of audit. It is a independence. Independence is the key word. The auditor has to be independent. It will reduce the risk of management with respect to bias, fraud and error. Somebody is watching, somebody is keeping eye on our financial statements. Definitely, we will be, see, very simple. We will be little bit cautious when we are somebody is watching us. Enhance the credibility of the, see, people will see who are the auditors. They say that yes, it is a big four. It makes impact when you are talking about a big four because they have that credibility. They have carried forward the credibility in the market. They worked hard on the things. These companies have, if anybody has done fraud, any company has done fraud, they will come up with the facts and figures. They don't hesitate. For them, their brand is important rather than the client retentionship. They are not talking about that the client will come or not. No, they will see that the brand. They charge high. They have very qualified people who can really perform the things very, very effectively, professionally. Is there deficiencies in the internal controls? See, I'm having my, you are having your own business. But what will happen unless some way, at least somebody is going to review the systems, you don't know. I will say, yes, this is the way of improvement. Is it, that's the thing. If somebody is reviewing it, then we know where there will be deficiencies. I will say my things are perfect, but somebody also say that I am doing in a right way. These are the benefits. Okay, next. What are the limitations? Financial statements are very subject to estimates. Estimates we are doing, estimate, that is the reason. You see IAS 37. IAS 37 talks about provisions. Provisions, you are talking about contingent liabilities, you are talking about contingent assets. I am writing everything clear. Is it contingent assets? First contingent liabilities will come, then contingent assets will come. We are talking about only the provisions. We are making a, why, what we are doing? Depreciation. It is an estimate. It is an estimate, is it? Subject to depreciation. We are talking in terms of what we are talking about as provisions. We will do provisions. We are doing provisions for receivables, bad and doubtful debts. Is it? We are doing provisions for income tax. Is it? We are doing provision for income tax. Is it? Likewise, we are making the provisions are only estimates, subject to. Different rules will apply. You have inherent limitations of internal controls. See, there is a concept of audit risk. Is it right? There is a concept. There is a risk involved in this. Audit risk consists of three things. Is that audit risk? There are three things. One, you will have a control risk. One will have a detection risk. One we have a inherent risk. Remember this, you will have 2 marks on this. We will cover in lecture 5. Is there? We will cover only on audit risk. There is one lecture is there. Is that? You have that. This, you have inherent limitations of internal controls. How much internal controls you will put? How much you will say that now you see the thing. Previously what used to happen, you take your own bank, okay? You take your own bank. I am taking an example. You are issuing an ATM card, okay? One person will issue card, okay? One person issue what? One person will issue the PIN number. Take the mechanism, how it's working, okay? Now what you have done, you said that no, it is not like that. Now you say that no, one person will issue the card. Is that one person will issue the card, and you can now the system is you can generate your OTP through ATM. Again, where can we say it's a perfect? Can we say that now what they say you can change the PIN number. Is it right? You change the PIN number. I am giving a small example. You can change the PIN number. The most important thing, what happens? Everything will be done with registered mobile number. People are coming because people are knowing. See, everywhere there is a scope. There is the scope where people will come with how to break the rules. We'll say it's a face recognition. It is, they say it's a face recognition, now they say it's a eye recognition. You are going everywhere one step ahead. Is that you are talking about, see the thing, you have, technology is changing. When the technology is changing, you have to change with the technology. Artificial intelligence is coming into picture. That is the reason from last 2 examinations they're talking about digital auditing. They say the artificial, they came. Now what happens? Everywhere there will be deficiency. There will be some inherent limitations will be there. Inbuilt limitations will be there. Representative from management not reliable. Internal, understand point? Internal confirmation. There are 2 types of confirmation. One is external confirmation, one is internal confirmation. Remember this, whatever is happening, internal confirmation is less reliable. External confirmation is more reliable. Management confirmation is internal. Is that management confirmation is internal? Internal confirmation is less. No, I'm not saying not reliable. Okay, we cannot. It is less reliable. Better, what you will say? You will say that yes, I want a confirmation. See, management will give you a bank balance. Okay, management, I will give the example. Management will say that what is the bank balance. What you will do? You will immediately approach the bank and say that whether this bank balance is matched with the bank balance. You are getting, you are having your own bank accounts is there. When you are getting the bank accounts, you will see what is, you will insert your ATM card and see what is the balance. Then at the end of the month, you will get a bank statement. Why people are sending bank statement? Bank statement is the external confirmation. Is that bank statement is more reliable, whereas management statement is less reliable. It says evidence of persuasive, not conclusive. This word will be a technical auditing word. We will come across this. See, evidence is not conclusive. You assume, you think, you make a judgment. Is that there is always a scope that you cannot say. It is a persuasive. You have to pursue it. You cannot say it is conclusive. You cannot say that yes, it has been done, it is okay. You will say, you will not use the word, I am saying this, you will not say okay. You will say it is okay, fine. There is a lot of difference between these 2 words. Is it? It is not conclusive. Do not test all transactions. They will test only the sample. Are you clear about this? What are the benefits of audit and what are the limitations of audit? Is it clear?
Yeah.
Yes. Now you see that it is little bit more specific. Okay, there are so many things are there. Okay, there are so many things are there. You are initially it will be little bit, it will take time, but I don't want to skip this one. They say that auditing is not objective. Judgments have to be made. You need to make judgments. Okay, you have to take your own. See, everyone you will have 5 different people. 5 different people have 5 different opinions. Okay, you cannot say that 2 people, even from our individual point of view, what you are thinking today and what you think tomorrow, definitely it will match. If I ask you a question, today answer will be different, tomorrow answer will be different. The context, the rules, that will be same, but you cannot say that the same. Judgment, why it is more judgment? It is based on situation. You plan something, but you go there, you have to make a judgment based on the situation. Is that in terms of opinion, what to test, how much to test, whether errors are representative, all these things comes here. This is point number 1. Not all items have been tested. Point number two. What to sample, how much sample, there will be a risk, isn't it? You are selecting only 1%, you select only 0.5%. Huge transaction, millions of transactions. Can we check the millions of transactions? Imagine, I will tell you the thing. You are talking about doing an audit for a bank, a branch. Can we test each and every transaction what happened on that day? Is it possible?
No.
No. It's not possible. Each deposits, each withdrawals, each transfers, it's very much it's impossible. Is it? You are going to make sure. That's what we are talking about. Thing. Next, what is the limitation? Limitations will be with respect to accounting and control systems. Sometimes controls will override. That is the reason you see the things. What happens? You take the thing. You have as a bank, you will give a password for your internet banking. Some bank says that you have to change the passwords every 3 months. You are putting the controls. Anything is happening. Is it right? Anything is happening. Immediately what we'll see, you are withdrawing cash. That is the control. You are withdrawing cash. The moment you withdraw the cash, before you take the cash from the cash dispenser, you will get a message, SMS alert. Before cash is dispatched, there is a control. They say that they will send a message. If this transaction is not done by you, then you respond this. They are making a controls at every stage. They will making a controls at every stage. They'll say that they will send an OTP. They say that different systems. Some banks say that this OTP is valid for 120 seconds. Some banks will say that this OTP valid only for 60 seconds. You're talking about the things, password. Is it right? You are talking about the password. You will say that first, second, third. If you enter the password the third time also, it will get blocked. These are the ways that we are talking in terms of limitations of auditing. Possibility of controls override. Is it? Now, that's what you will have. The next one is what you are talking about, the evidence. Sometimes indicate what is probable, not certain. Audit evidence sometimes indicate what is not probable. See, when you are talking about the evidence, you will see what it all depends on the judgment, what you are doing, what you are thinking. Everyone will have, that is the reason when you are doing the things, we will have a audit team. Is that audit team will be there. Always they say there should be a professional skepticism. This is all the audit language. Is it right? You should always have a questioning mind. Yeah, you will have what are the intentions, what are the estimates. Is it? Now, what it says that audit report is long time after the year end, after the reporting date. Just now we have covered this. Is it? We have the order. Now, the last one is audit report has in terms of standard format can be limiting. Layman may not understand audit jargon. Why people are fine. See, if you next 3 months till examination, the only difference between passing and not passing is you should have audit jargon. Language of auditing is very important. The moment you understand the language of auditing, people will test. Have you have the language of auditing? Automatically things will move forward. Is it okay with you this? Any doubts you ask me?
Yeah.
Is there any doubts? See the thing. What they say, keep it in mind. This is most important thing. What they are saying, auditors cannot never certify the accounts are correct. They can only express the opinion. Is right? They can only express the opinion. Wherever I am putting purple color, it is important. Is it now you come to the conclusion that yes, they will give a reasonable assurance, they will give a limited assurance. Tomorrow also you are going to do, you will never say it is going to be correct. Next. Are you clear about this one?
Yeah.
Fine. See, I'm giving you a complete picture, okay? Complete picture. First introduction chapter covers all the things, all the concepts, okay? Now, coming, use the audit, use materiality. What is materiality? Materiality is in terms of value. Very simple. Very straightforward. Is that now? It talks about what? It talks about your financial statements. It talks about omission, misstatements. You will say material misstatement. Is it right? You say it is a material misstatement. Material misstatement, you will say it is individually, it is aggregate. See the things. I'm giving examples with respect to the tellers. In the banks you have tellers. Anybody working with the teller, if I am wrong, you can correct me. They will give some amount extra, because what happens, there is a possibility that there will be balances will be not tallied. Mismanagement of cash. Is it mismanagement of cash? Now you put the same thing. Is it right? You put the same thing. You put a retail business. Okay, retail business. In the retail business, you have assumed if you take the thing, you have counters. Here also you have a cashier. Here also you will have a cashier. Is that here also you have a cashier? Here also you take simple. You take any retail, Lulu, you take Carrefour, you take wherever it is there. Now, you assume you will have how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 people, 12 into 2, how much? 24 cashiers are there. Even there is a mismanagement of 5 reals per day. Okay? That's 5 into 24. It comes to how much? It comes to 120 reals. It comes to 120 reals. That is the reason people are very specific. Even 5 baza is material. If you take 5 baza, even multiply by 5 baza to 24, that is also material. Is it 5 baza? Now what happens? Material misstatement individually and material misstatement aggregate. If you take material misstatement individually, it is 5. If you take aggregate, it will be how much? Material. 120 reals is material. 5 reals is material. Understand this word. In our question answers, at least we have to use it for 5 or 6 times. Auditors use materiality is an expression of relative significance or importance of a particular matter. When we say particular matter, very clear. Particular, they say it is in terms of value. In the context of financial instruments, a matter is material if it is omission. You are removing, you are ignoring 5 years. That is the reason. Now you see the thing. You see, whenever you see the practical thing, you are going to withdraw money or you are going to deposit money. They say that how many 50 currency notes? 50, they say 20, they say 5, they say 10, they say 5, they say 1, they say, I don't know, 500 paisa. And in some cases they will say what are the coins. They put the denominations, is it right? Because if something goes wrong, see, you people are working in bank, you are more. If something goes wrong, immediately you check the denominations. Immediately you check the denomination. You can track to whom you have given more or to whom you have given less. Is that? This is what? It is omission of a or misstatement would reasonably influence the economic decisions. It will influence. Materiality depends on the size of the item or error. Is that? And in particular some circumstances, whether it is omission or it is a misstatement. You will put as a omission. If you are putting it's a mistake. Sometimes it happens. There is no doubt on that. There will be. Sometimes you will put what? Instead of putting 200, you will put 20. Instead of 200, you will put 2000s. It is an error will happen. There is nothing like that. Is that there is a part of error. This type of errors is called as error of commission. Is that? We will look into this in a more detail in chapter 6. Okay?
So omission means errors?
Pardon?
Omission, it means errors?
Yeah, commission, it is an error, na? Instead of 200, you put 2000, you put 200. It is an error, na?
Yeah.
Instead of 20, you put 200. It is an error. That is the reason. That is the reason why we are using denominations. We are using denominations only to minimize the errors. What we are doing, we will say, we are saying denomination. We will say in value, we will say in words. Is it? In value it is 20 reals. Is it right? They will ask, in words you have to write 20 reals. On the check, is it right? On the check, what you will do? You will say, you will mention the name, you will mention the account number, you will mention the value 20, and you will write in words also 20 reals. That is the internal control. Why you are doing this? It's just to minimize any deficiency in materiality. Is it okay? Is it clear?
Yeah.
What they are saying, see, is that what is the following, which of the following are related to review engagement? Is that the review engagement talks about what this they have given answers also. Okay, in the reality I will not give you answers. I will tell you how I will do the multiple choice questions also. Okay, once we have completed 5 chapters, then I will start MCQs. Okay, this what it says, subject matter is plausible. I told you, I gave you the best example. I gave you which of if you have this, is that you are seeing a YouTube channel, you are using a YouTube channel, you will say pause will be there, you will have the back playback will be there, you have play forward will be there. Is it? It is there. Now, review engagements are reasonable assurance. Always will not be reasonable assurance. Is it right? You have reasonable assurance and positive assurance provided by the external auditor. Is it? A review engagement provides what? It only provides a limited assurance. Review engagements, okay, only it gives me you are what you will do, you are doing a tax audit, you are reviewing, is that you are reviewing, but again see again at the top again the whatever you are reviewing it has to have a confirmation. When we say is a plausible means nothing has come to our attention. Limited assurance. Is that nothing has come to our as a plausible means definitely you will stop. Because it is plausible, we are what we are doing? We are doing substantive procedures. Because it is plausible, we are not going to say it is correct. Yes, tell me please.
No, everything's fine.
Okay? Okay? This is where, it means you should make it a point that how we are going to work. We will never ever give a positive assurance. Is it okay?
Yeah.
A question, this is examination question, okay? This is one of the exam question which has been given in the past, okay? This is what we are using BPP, okay? Wherever there is a Kaplan, if you come across, I have integrated both the things. Wherever there is a Kaplan, I use Kaplan, okay? If there is no Kaplan, it means it is, the color difference is there, okay? I have added the things from both the cases. You are newly appointed auditor of Jones, a company which has previously not have been external audit because of size. Is it not because of size? Divide the sentence. Okay. Most importantly, divide the sentence. Every sentence will have one question. Every paragraph will have one question. This is the approach you should know. Is that the owner of the company does not fully understand why an external audit cannot provide complete assurance over the truth. The owner doesn't know. Explain what is the inherent limitations. Is that what are the inherent? What it says, the external audit, put the points. Okay, put the points. Very simple. The external audit can provide a high level of truth and fairness of financial statements, but cannot provide an absolute assurance. You cannot provide. Yes, it's fine. You can say, oh, it's okay. I will say what we'll say. We'll say inshallah, 100%. Is that we say inshallah? Inshallah doesn't mean 100%. Nothing is there for with us. Is that we cannot say, we cannot do, just understand this concept, everything you can understand. You cannot say that 100%. You said, okay, fine, it's okay. But you cannot say it's correct. Is that there is so much difference. You can say fine, you say okay, you say it is correct. If you go in details, there is a lot of difference. You cannot say, because we cannot work out on each a number of reasons. You cannot work on each and every accounting and control systems. They said they cannot test 100% of transactions. Doing so with you need lot of cost and time. Instead of that, auditors will use what? They will use professional judgments. Now, coming back to this, is there materiality? I'm doing this. We'll say materiality. Now you say you have sales. Is that you have sales, you have profits. Is that we will use a concept called as performance materiality. Is that performance materiality? You will use overall materiality. In auditing, ACCA has made very specific. There should be a difference of 1%. Unaudited and audited. Profits, they say it is going to be 5%. That is the maximum. Then you say this is the threshold. Maximum 5%. Is it right? They say non-current assets, or they say take and they say fixed assets. They say that the difference should not be more than 2%. It doesn't mean that you can take the advantage of 2%. You have to be minimum. Is that you have to be as less as possible. Is that it has to be as less as possible. Doesn't know that they have given me 1%, I can do errors to the extent of 1%. No. Is that the concept of materiality? This is only a framework they mentioned you. This is only the framework that talks about how much should be the sales materiality. This concept is called as performance materiality. Remember
So
all
the
these points. Yes, tell me.
so the error for each item, so we have a threshold. We have 1%, for example, for the sales and 2% for the profit, right?
Maximum.
Okay, maximum.
But you cannot take it as a benchmark, and we cannot take it as an advantage that I can do 1% errors.
Yeah, okay.
Okay? Okay, you cannot, even if you have sales less than that, that's the lesser, the more effective. Is that the lesser, the more effective? Is it okay?
Yeah.
Are you understanding what's happening?
So those are the maximum errors done by the company, not the audit firm, right?
No, no, no. This is the rules of ACCA code. We'll cover this in the next chapters. Is it right? The ACCA code, we are working within the framework of ACCA code.
Okay.
Okay, we are working within the framework of ACCA code. We are not going beyond that. Anything we are discussing, any rules we are discussing within the ACCA code. They say that sales is a big value, percentage is less. Profit is a small value. Compared to sales, definitely you deduct all the expenses, you will get the profits will be comparatively lesser than sales. Then performance materiality should not be more than, the difference should not be more than 5%. Means the difference between unaudited and audited financial statements. Is that the difference between unaudited and audited financial statement should not be more than 5%. It should be as less as possible. Even if you say 5, if you are getting 0.05, fine. That is the reason. That is the reason most of the companies, what they will do, first they will publish unaudited financial statements, and after that they will publish audited financial statements. Are you clear about this?
Yeah.
Evidence that the auditors may obtain sometimes only indicates it is probable. Is that that's what we are not certain. Is that it is what is the available information. This applies to the figures in terms of what? In terms of estimates. You are talking about depreciation. It's an estimate. Is it right? You are talking about the provisions. It is estimate. Bad and doubtful debts. It is an estimate. Is that you are talking? See what will happen? You will have the credit sales. Okay, you have the credit sales. You will convert into a receivables. Okay, you will convert. In this, you will say what is the provision. It is only an estimate. What you will get? You will get the net receivables. This is what we are doing. This is only an estimated loss. Is it? The auditor has limitations. Is sometimes we have done this after the reporting date. Date of preparation. Is it? Date of preparation. Is it right? When you have year end. Is it right? Year end. Is it clear to you?
Yeah.
Is that? For how much they will give? They will give you 3 marks. Yeah, this question is what? Just 3 marks. So you have, see very clearly, they are calculating. I told you, if you take 3 into 1.8, 3 marks into 1.8, you have to answer how much. If you take into consideration 3 times 1.8, it comes to 5 minutes, 5.4. Your answer need to be very succinct, very pointed. That required statement says identify and explain. So first state what is the level of insurance and provide for each engagement, then explain it further. Use 2 headings, one for each type of engagement. Is it okay?
Yeah.
Fine? Now, see, that's what it says. What is the explain and identify level of assurance provided by the external auditor? What it talks about, the external auditor provides reasonable assurance. Now, you see, that is the reason. When you study the content, answers will be very easy. Reasonable assurance is high level assurance. Is that? And is expressed. Definitely, reasonable assurance is a positive one. Is that? In our opinion. Is that? In our opinion, the financial statements are presented fairly in all material aspects. Or they will say true and fair. Is it clear to you?
Yeah.
What are the other review engagements? See, other provides review limited assurance is the low level of assurance. Now you get more clarity. We are going in more detail. More detail. Same concept will go further. It is limited assurance is nothing but a negative opinion. What is the negative opinion when they say? It says that nothing has come to our attention. See, automatically when we say limited, see, very few instances you are saying it is a limited assurance. Limited, somebody gives limited assurance means it is a big question mark of the client. Right, a big question mark of the client. You never expect, you never think that they will have a negative opinion. Okay, limited assurance. In the examination, they will not ask all the things. They will say whether it is reasonable or negative assurance. Again, from examination point of view, you have to focus. The moment we start doing questions, you have to focus on these points only. 1, 2, and 3. You cannot go beyond this. All the things, whatever I am writing, it is only to support your understanding. Don't say that we have to write, we should be write all this. No, we have to focus on this as simple as possible. See what it says. See now this syllabus could come with the short knowledge based questions in section B. They ask about the elements of assurance, engagements. Is that it will could be also be tested in MCQ. Is that section as we saw, these kind of should be present in a relatively straightforward marks. It is theory, there is no application. It is only based on theory, rules as simple as that. Definitions you can put like this. You don't write more. Getting my point, keep it in mind. You don't say that I will write 3 marks, 3 points. What they are asking, identify and explain. That's all. Is that you have to identify and you have to explain. When you are explaining, not more than 1 or 2 sentences. Is that? But don't overrun on writing everything you know. Is it right? Is that? You know in section B and you will lose time. Very clearly, people should understand this. If you are understanding this, it is 90% you are thorough with exam. Is it 90% you are thorough with exam essay? Are you clear about this?
Yeah, so I have one question, please. So, in order to focus on quality, not on quantity, can we understand all the slides, the concept of like every part, but memorize only the most important slides, which you highlighted previously?
See, now just I will review it, okay, from the beginning. I will just put the purple colors on that, okay. I will make it very user friendly for you. I will take 5 areas maximum, okay. I will take 5 areas, okay, where you will come across the entire thing, okay, where you will come across the entire thing. If you ask me, okay, if you ask me, the most important thing here is Here we are talking about the assurance engagement. Is it right? Assurance engagement. Fine.
Okay.
Okay. Wherever I put star with purple, assurance engagement means, see the thing. It will come here also. This is also part of that. Okay. What are the 5 elements is also part of that. Okay. Crest, the most important thing. I told you, see the thing. I mentioned here 3 marks. Is that already I mentioned 3. Crest, criteria, report, evidence, subject matter, 3-party relationship. This will be there. At any year, they will ask you from any aspect as a matter of fact. Okay. This is the assurance. Now you can put who are the intended users, reasonable party, practitioner. They gave the explanations of that. Is that? They gave the answer also. How you have to write it. Are you clear about this?
Yeah.
Okay. Next. This is the same thing. Assurance of engagement. What are the auditors are frequently required to provide a range of non-audit engagements. Is it? They are non-audit. What they are doing? They say that when you are talking about the non-audit engagements, you should make that how it is going to be worked it out. Same thing they are saying. So 3-party, all the things. Is it? Types of assurance services. Is it? Types of assurance. We will cover this. Why I am not putting here is, again we will cover in one of the, see I have put star here also. Is it? I will put star. This will be there, going concern. Okay, going concern. By default,
We will refer to this later, right?
Huh?
We will refer to this later. I mean, the going
This will be
concern
there in
process.
chapter 11, review.
Yeah.
Chapter 11, going concern. I think still I have not started ISA, okay? Still it is too early to say ISA, International Standards of Auditing. Is that? We will cover this most probably from lecture 3 or lecture 4. Is it right? In detail. Is it right? In detail we will cover from lecture 4. Is it right? What is the review engagement? This they will ask, if I am not right, if they will, this they will ask in MCQ. Same thing, regulatory framework, IAS, IFRS and national laws. Okay, IAS, IFRS and national. See, another thing I will tell you very clearly. This is not an academic exam. This is a professional exam. Very clear. This is a professional exam. We cannot go with the planning that this will be asked. We cannot. Very simple. Now I will put it in recording. We cannot say that we will cover 100% of the every concept, and we cannot say that we are going to focus on some important concepts. Auditing any paper in ACCA, because you are writing for the first time, any paper in ACCA, they will cover all topics. All topics. And as a matter of fact, they will cover even those topics which you have skipped. We think that yes, this is not important. Definitely that will be covered in ACCA. Then once we write the examination and come back, they will be somewhere down, somewhere in small bits. Small bit. Then we'll realize that, oh, we have not covered this. Is that? Likewise, you don't, I am telling you in the beginning, you start preparing from now onwards. Is that? Start preparing from, it will be easy. By the time you reach, you are writing June examination, by the time you reach May 15th, onwards you have to only revise. You cannot, I am not going to teach any new topics in the last stages. Only whatever you are, only the things which you have done. One student was there, I am telling you this. She is writing financial reporting. She said that now I will start revising. I said, this is almost 15th of Feb. How many days are there? You are having 28 days and you have 4 days. If you take correctly 13 plus 4, 17 days are there. Now you cannot start preparing. You cannot. Now it is the time of revision. As simple as that. Okay. Now it is. If you start now doing, you will get panic. You should not get in a panic mode. That is the reason you have to start well in advance. Okay. So keep it in mind. See, another thing. The one thing is, I will where every class I will go to the previous section. Every class I will not going to say that when anything related to internal audit, I will say yes, internal audit, they will examine, evaluate and monitor the internal control systems. Wherever is possible, I will go the value for money audit, economy, efficiency and effectiveness. You will come across this in the audit evidence. When you talk about audit evidence, the moment you say value for money, before I say, you will say 1, 2, 3. So I will insist, I will repeat the concepts again and again wherever it is applicable, so that it will be there in your mind and you can make an interpretation. And questions are not structured, they will test. This is a professional exam. They will test you your intelligence. They will test you your analytical aspects. So all the things will go there. Never say that which is important and which is not important. I will say these are the important things. I'm not going to say that. I will say means you have to. That doesn't mean that in the college, the moment you have so many slides, the moment teacher will say, they will ask, this is not important, you will cancel the slide. It will not help, okay? It will not help. It will not. You will say that, yes, this is not there, you will cancel the slide. You don't do that.
What I mean is understanding all the slides, not skipping the
Understand
slides.
always slides. Okay, understand. Understanding is a
But just memorizing like the main concepts.
Sabar. When the moment I will start section A, give me time. The moment I will start section A, I will make you more comfortable there. Okay? The moment I start section A, you will give answers on your own. We have done chapter 1, is it right? Next we'll start chapter 2.
Yeah.
When we start chapter 2, we will have the things. Chapter 2, 3, 4, 5. Initially, it will take time, but the moment we'll go forward, we are going in detail, we will have more clarity.
Okay.
Is it clear?
Yeah.
Can we start chapter 2 now, or we can start next class?
Okay, after your convenience.